Good evening, everyone. Welcome to Tax Resolution Help Center. My name is May. I will be hosting today's session and introducing today's speaker. I will also be coordinating the Q&A chat session at the end of this session. I want to congratulate you all for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you're entitled to live a happier, healthier life by keeping more of what you earn and getting the taxman off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation itself will last about 20 minutes, plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And to better understand what might be on your mind during the session, I might include some pooling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. The topic for today's session is everything you need to know about tax payment plans, installment agreements, and offer in compromise. And the tax expert for today's session is Jared Smouth. Jared has been a CPA for over 18 years, where his experience spans state and local governments, nonprofits, individuals, and small businesses by providing accounting, budgeting, financial, information technology, management, pension, tax, and other services. He is a firm believer that taxes are important for our government to function. However, he does not believe we should be paying any more than we should and enjoys helping his clients find ways to optimize their tax situation. With that said, introducing Jared's Mouth.
Good evening, everyone. I appreciate you joining us tonight. I apologize for um, my congestion coming across. I'm coming at the tail end of a cold, but it's grateful to be with you guys here tonight. I'm going to focus tonight on offer and compromise, and other weeks we'll address the payment plans and other things, but specifically offer and compromise tonight. Am I unmuted now? I thought I had unmuted. Sorry. Less than the full amount owed. I seem to be getting muted all the time. Is any way that's happening? Or?
Oh, apologies for that, but no, actually, you are on mute now. I'll
Yeah,
make sure to check on that. Okay. Apologize for
yeah.
the technical difficulty.
Okay. So the goals of the program are one, to achieve a resolution in the best interest of both parties, you, the taxpayer, and the government, to collect what they can reasonably collect in an earliest possible time and at the least cost. Government, surprisingly, I know it's hard to believe, they want to be efficient in their operations and not spend more money trying to collect less, and as well as to secure revenue that may not be collected through any other means. So if they're not able to collect it a certain way, an operant compromise is a way for them to collect it. And like any creditor, the government encounters situations where they can't collect certain things, and so for their accounts receivable, and so there's the legitimate dispute. There could be a legitimate dispute on what's owed by the taxpayer, and so it's accepted business practice for the government to negotiate something less than what is originally was calculated. You can see that. But it also provides for a way for the taxpayer to get a fresh start. They want to help the taxpayer to be compliant and to move forward and to be voluntary in their payments. We have people don't like this hanging over their head. I helped a couple this past year file 10 years of tax returns. They hadn't been filing for 10 years, but they wanted to buy a house. And in order to buy a house, if you don't have cash to pay for it, to be approved for um, financing, you have to be able to show that you've been filing your taxes. And so we filed 10 years of tax returns, and they owed quite a bit. They're on a payment plan to get that paid off, and they got their house this past year. They were able to buy a house and realize their dreams and move forward and get that cloud over their head kind of dispersed a little bit. But the program only succeeds if taxpayers make adequate compromise proposals. In other words, you as a taxpayer propose something that's reasonable and acceptable and provide the appropriate documentation and consistent with your ability to pay, and the IRS is prompt in their decisions and they're responding back to you. So there are three types of offers: doubt as to collectability, doubt as to liability, and effective tax administration. And I'll explain each of those. Doubt as to collectability is the most common type of offer, and it's when we as taxpayers are unable, after financial analysis, to pay our liability in full. The DATC offer must equal or exceed a taxpayer's reasonable collection potential in order to be acceptable. Reasonable collection potential is what the IRS believes is your ability to pay. Doubt as to liability basically is you as a taxpayer disagree with what was calculated and what the IRS says you owe, and it could be legitimate. Mistakes are made, calculations are wrong. There's legitimate reasons for the liability that's calculated to be wrong. The IRS, when they go through returns and do their random audits or their systems checks and check our numbers, they come up with something. They match up documents that they receive from third parties to match up with your social security number. If they come up with numbers that are different than what you report in your tax return, they're going to send you a letter and they're going to say, hey, we believe that your tax return was reported incorrectly. They don't make any assumption of the reasons as to why. They just say, here's the facts, here's the data we have, here's the data you provided. And so doubt as to liability is those situations where your numbers don't agree with the IRS. And then effective tax administration, it's where you as the taxpayer, we as the taxpayer, we do owe the amount, and we may have enough assets and income to pay the liability in full, but due to special circumstances, it would create an economic hardship for us or simply be inequitable. The two options to file under the effective tax administration: if you're paying more than the amount offered, it would create a financial hardship. Let's say you have enough assets, you have enough savings, you can pay off your $50,000 debt to the IRS, but that leaves you homeless. those are kind of the situations. A little extreme, but to give you an example. And another example is, let's say you paid your taxes through a payroll service provider, but the service provider misappropriated those funds. Someone absconded with those funds and took them, and they didn't submit them to the IRS. So yes, you're liable for those taxes, but is it right for the IRS to require you to pay your taxes again? So that's what effective tax administration is about. However, the IRS wants us to be clear that an offer is not the first option. It's not something we should go to in the very beginning. The other options are full pay. If you can pay it and they can see you can pay it and you have the funds to pay it, they're going to expect you to pay it. Um, but only if it's evident that you have the ability to full pay and there are no other circumstances like the doubt as to liability and effective tax administration. If you can borrow the funds, there are stories of people going to family, borrowing funds to pay the IRS. They also believe that that's an acceptable uh, method to pay down your liability. If you have equity in certain assets, they expect you to liquidate some of those to be able to pay off your debts. And finally, the installment agreement, which in future weeks we'll get into details of that, but it's basically you're paying it off over time. There will be interest, there will be penalties that'll still continue to accrue in that period of time. But an installment agreement is something that allows you to pick away at it. So how are these offers calculated? First, they need to find out, they want to know what your net realizable equity and assets are. So if you have assets, they look at the quick sale value, and that's not necessarily market value and what someone is willing to pay. Uh, if you put your house on the market, you have the ability to kind of negotiate and wait and get the best price. And a quick sale value is something less than that. But if you were just to go maybe out on the auction or something and sell your stuff, how much could you get for that? Less the amount that you owe on it to other lien holders that have priority over any federal taxing that may be on your property. And there's some exemption amounts too. You look at your future income, an estimate of your ability to pay based on analysis of gross income, less necessary living expenses for a specific number of months into the future. They look at how much are you expected to make over the next year or two, and see what can they take of your disposable income to help pay off that liability. And then they do give you some allowable expenses, and these are expenses that meet the necessary tax tests. Basically, they're necessary to provide you, the taxpayer, family, health and welfare, and/or production of income. Two types of these expenses: allowable living expenses for your food, clothing, shelter. They give you some guidelines, but it's not. It needs to be understood. It's not necessarily the lifestyle spending that we currently have. They're not necessarily going to allow us to continue to spend if we overspend in areas compared to others, compared to their indexes, compared to their numbers. And there's other necessary expenses that are specific to your situation that they will consider. So how to submit the offer? There's a number of forms you got to fill out, and it's very important that you fill these forms out accurately, correctly, because they get scrutinized, they looked at, and if there's things that are missing, it's possible your application could be denied. There's a $205 application fee, if applicable. If you meet a certain income, if your income's below a certain level, you could be exempt from that. And then when you come up, when you when you submit the application, you submit your offer, and you go through your analysis, and you tell them, here's my offer, what I'm willing to give you, and it could be 10% of a cash offer or your first part of a particular payment. You may qualify to waive some of these payments based on your AGI. Um, Low income certification only applies to initial individual offers. And there is a pre-qualifier tool available on the IRS website that will help you to determine these, uh, the process here. So here's the very brief overview of the process that the application goes through. First, the offer is received. Taxpayer mails the offer with original signature. It has to be your original wet signature to your appropriate site. To New York or Tennessee, there is no e-file availability, and it's based on your state of residence. Processability determination, it goes to the first step. Process examiners will review it, see if the offer is processable or not. And that means all the T's are crossed, the I's are dotted, the correct forms are used, fee was included if necessary, just making sure that the application is filled out properly. And if they determine that it's processable, then it goes um, into the system where it gets looked at and assigned to one of the holding queues. Offers in compromise or offers in centralized offers in compromise are for individuals. Offers in field are for businesses and other situations. And then it goes through the investigation, and it goes through closure. And so there's the whole process that they go through, and it takes at least 6 months. It's not something that happens overnight, but again, going back to the goals of the program, is for this this to be efficient and to be be done quickly in terms of not dragging their feet. So a few helpful hints: you need to stay filing and payment compliant. You have to kind of be current with some things. They're going to ask you if you're current on your estimated payments. There's issues there if you're not. You need to include fees and applicable payments. You need to respond promptly to inquiries or requests for more information. You need to value your property and assets accurately, and make sure that any documentation you provide is current within 6 months. Explore all your collection options. Utilize a pre-qualifier tool and complete the financial statements and forms carefully. Include the correct forms and complete the checklist that they provide. And then there's a link there for the IRS videos on offering compromise that help walk you through all the steps. So that is a very high level overview of the offering compromise program. Certainly could spend a lot of time on each individual slide and each individual step in the process. But now we're open for questions and happy to answer them.
All right, thank you, Jared. So we do have a question here posted. This is in Zoom. So it's from anonymous attendee. The question is, will the IRS require me to include my retirement assets in their assessment about how much I should pay in past tax debt?
They're not going to require you to liquidate your retirement, but if you're receiving retirement funds, if you're receiving distributions already, that's going to be included in your income. Well, that is something that they will certainly consider.
Okay, thank you. Now, the second question, it's from Nick. This is also in Zoom posted. Can I set up a payment plan with the state of California?
I would I would be very confident you could. I'm not familiar with California specifically. I'm in Arizona, but I have not heard of any state that does not also have payment plans.
Okay. Awesome. Thank you. Now we have a question. This is coming from our live stream, StreamYard. Does it cost me anything to set up a payment plan with the IRS?
There are small fees, like 35 bucks or something, depending on the type of payment plan you set up. And I don't remember the specifics of it. I apologize. But there's short-term payment plans and there's long-term payment plans. And there's if you just Google IRS payment plans, you'll find their website readily available, and they have an FAQ that answers some of those questions.
Okay. Awesome. Thank you for that answer, Jared. Anything else that you want to add? That was actually our last question for today.
Oh, that's it. Thank you, everybody.
Yeah, thank you so much, also, Jared. All right. Well, that covers our questions for tonight and for today's session. I want to thank everyone for attending, and we make sure that we provide all information. Our commitment is to help you reduce your taxes and increase your wealth. We do this with the TriTax method of DIY, do it yourself, DIT, do it together, and DIA, do it all. Three methods, one solution. Reduce stress from no IRS or state tax debt and a happier, healthier life. If you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. Since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please check our website at taxresolutionhelpcenter.com and please join as a member today for $19.95 per month. Thank you for attending.